Finally, some improvement in mortgage rates last week. No, we're nowhere near where we all want to be, as 30-year rates still remain in the upper sixes. But for the first time in what feels like forever, at least we gained some ground. So most of the week, the war and its impact on oil prices and therefore inflation really is what drove rates. But on Friday, the big jobs report showed fewer jobs created than what was predicted, and this helped finish last week lower than we had for the prior 3 weeks. What about this week? We have 2 big inflation reports, and they will dictate this week's rate movement. CPI is the Consumer Price Index. We will see it released on Tuesday. It is essentially what it cost consumers to buy certain required items. And then on Wednesday, the very next day, we will see the Producer Price Index, or PPI. It's basically the same thing, but it's for producers. So these track the cost of things over time. As stuff is getting more expensive, that's inflation, and that's what the Fed is watching. And that's what the markets are watching as well. So where do we currently stand? The 30-year fixed rate, according to Mortgage News Daily, the 30-year is at 6.74%, the 15-year is at 6.25%, and the FHA 30 is at 6.28%. Not surprisingly, this week we are watching for those 2 inflationary reports. These are the first reports that we'll see for CPI and PPI since we have a new Fed chair. The markets will be interested to see how they interpret the data and whether this inflationary numbers keep showing increased. A lot of that, of course, is oil dependent, and so we'll watch oil, and oil is moving based on what the war is doing, so we'll watch the war as well. So no change really in what we're looking at, but there is some data that could move the needle this week. If you have questions about anything mortgage related, we'd love to help you. 205-823-6701. For Weber Mortgage, a family in the business of helping your family.